Hi, this is Jeff Ell with Ell Group Real Estate, and today we are coming to you from the newly developed Soul Block Plaza in the historic Sunshine Mile off of Broadway in central Tucson. Today we're talking about the recent Fed interest rate cut. Now you may be wondering, how does that impact mortgage rates? If they cut by half a point, does that drop our mortgage rates by half a point? And actually, the inverse happened. We saw mortgage rates increase when the Fed cut their rate by half a point. So why does that happen? Because everybody expected the Fed to cut rates, the mortgage industry had already built that into their numbers. And because the rate was cut by a half a point, everything was exactly as expected. So the mortgage industry feeling good about what the Fed did, they increased just a little bit, but essentially they stayed the same. What a lot of people misunderstand about interest rates is when the Fed cuts rates, that doesn't directly correlate in a rate cut to mortgage rates. The mortgage industry usually looks at what they think the Fed is going to do, and they're going to act ahead of that. And if the Fed does something they didn't think they were going to do, then rates could dramatically increase or decrease because it wasn't what the industry expected. In summary, the Fed slashed rates and the mortgage industry mortgage rates reacted barely by a slight increase. We are still much lower than we were at the beginning of the year, where we were close to 7%. We are now at 6.15% as we're recording this video. So what does this mean for you? If the Fed reduced their rate, but mortgage rates went up slightly, what does this mean for you, for the future, and for the future of mortgage rates? The Fed has announced that they anticipate reducing rates steadily over the next couple of years. So again, the mortgage industry knows that. They're going to anticipate that, and you will see mortgage rates, again, slowly start to decrease in anticipation of what the Fed does. Now, if the Fed does something surprising, like not cut a rate at their next meeting, then you could see interest rates have a dramatic effect by increasing because they are thinking that the Fed is going to do a reduction. So we are going to see mortgage rates come down. I just wanted to make a point too that it's not directly correlated with what the Fed is doing. So when you hear the Fed dropped rates by a half a point or a quarter of a point, that doesn't mean that tomorrow mortgage rates are going to drop by that exact same amount. They probably already dropped ahead of time in anticipation of what the Fed is going to do. As always, we are here to provide valuable information on the real estate industry. Don't hesitate to give us a call if you have any questions on what's going on currently with mortgage rates or what we think could happen in the future and how that's going to impact real estate prices as well. Like and subscribe to our channel so you can stay up to date on current and future real estate news. Again, this is Jeff Ell with Ell Group Real Estate. Take care.